Welcome back to GoldSeek TV. I'm Vanessa Collette, and I'm here with Marin Katusa, the founder of Katusa Research, hedge fund manager, and author of the New York Times bestseller, The Colder War. It's great to have you back again,
Thanks.
Marin. Now, Marin, resources, as you well know, are down across the board. The World Bank is saying that this is going to last for a little bit longer. What's your take right now?
Actually, rarely do I ever agree with think tanks. As you know, many times on your show, I said be careful, I see a slowdown. Even at my previous firm, I wasn't popular by saying that, but the reality is yes, these companies are cheap. Yes, resources, relatively speaking to where we were, are cheap. Unfortunately, I think that the World Bank is right. I think the IMF is right. I think resources are going to get cheaper. But
Right.
That's an opportunity.
And is that because there's such a glut of supply? I mean, we're seeing with copper companies, they're still profitable at these levels, so they have no real incentive to cut production. And is it same with oil,
It's
right?
a few things. So yes, the producers, let's take Copper Mountain, for example, which I'm one of the founders and directors of. The team has done an incredible job to adapt to the costs. So with lower tire costs, lower oil means lower rubber, lower tire costs, lower steel costs, so you're crushing, your balls, your steel's a big cost. Diesel, you run your trucks, it's priced, 35% off, so you're saving a lot there, but you're also doing production improvements.
Right.
And that's across the board. It's not Copper Mountain specific. You look at Freeport, you look at all the guys, the Lundins, they're all figuring out how to lower BHP, Rio Tinto. So that's one thing, innovation through necessity. Then you look at, okay, well, what about the producers? Where are they? Let's say if you're producing outside of the US, your currency is being crushed, therefore your cost of production's lower and you're selling in a US currency. So you got that differential. Then let's talk about the demand perspective. The reality is China is slowing down. So, you look at, let's take oil for example. Everyone thought that Russia would be on their knees. I said, no. Russia's going to do just fine with their production because look at the ruble. It's still going to be the cost of production in their currency. Russia's increased production. Since the collapse in oil prices, Saudi Arabia's increased production. Everyone thought that shale production would decrease. Well, it hasn't. China's increased production. People forget that China's a serious oil producer too.
Right.
So the demand perspective, the emerging markets are suffering. So the demand isn't meeting what the markets are expecting. And hence why we see a collapse in prices, and I don't see that changing in the near term.
Now, we talked about China a little bit there. With the recent stock market declines, do you think that that's connected to the overall economy, or is it more to do with the fact that it's a new market, it's a lot of new investors, 80% of the market, I think, is just all retail investors?
Well, it's a new market, right?
Yeah.
So there's a big stampede in, and they have so many rules, like the stock can't go below 10% in one day, then they lock it, they halt it. So it's a lot of factors, but where is the average Chinese retail investor going to put his money? Real estate's rocked. They saw that bubble happen. They can't gamble. So if you look at it, gambling's illegal in mainland China. So maybe the stock market is taking a little bit of that money, right? So every new market's going to have that. The Americans had it with the tech bubble, the great crash. So I think that China's going to do just fine long run. And I think there's some bigger issues going on here. Everyone talks about black swan events and this and that. I think with the derivatives that I focus on in my book, you take a country like Germany, for example, their derivative market is bigger than the whole global GDP combined. To me, I'm worrying more about a herd of black elephants that are going to come at. Don't worry about black swans. We're looking at a potential of herd of black elephants. So China's going to do fine, but you see the emerging markets coming together. The Americans are painting themselves in a corner where their friends are broke. So there's a lot of problems here. So it's going to take time to work itself out. And my worry is if we're in a deflationary environment, time will tell where we are, will there be a revolution before growth? And where will that happen?
And what do you mean in terms of revolution?
Like what happens if the Chinese economy does collapse? So
Well, it seems like they still have a lot of arrows in their quiver. I mean,
Sure
of
they
all
do.
the countries, the U.S. printed money, that Europe's doing quantitative easing, China didn't, and they've barely utilized any of their tools yet. So
Exactly, and don't underestimate the central bankers. I know everyone's saying that this is all nonsense that's going on. I compare it to like quantum mechanics where we talk about imaginary variables. You're taking things that should make sense, but negative interest rates, like that just changed the whole concept of economics.
Right.
So I think, China's going to, yes, it's going to have its ups and downs and corrections, and people are going to make fortunes and lose fortunes, but don't underestimate the dragon. And here in the West, we've been focusing so much on the Greeks.
Right.
And I like to remind people, focus on the dragon, not the olive.
Yeah, I saw that you mentioned that a couple of times. So you don't think that Greece is anything to be concerned about? Do you think that they will exit, or it just seems that every day they go back and forth?
That's what it is. Historically, look at the Greeks on the debt. They've defaulted on debt, I think, 78 times in their history, or whatever the number is. And globally speaking, it's irrelevant. Okay. Yes, it's an issue for the Greek banks, and it's great for the media because they need to talk about drama. But there's some serious, bigger things going on. Look at Iran. What happens if Saudi Arabia now starts aligning itself up with Russia and China? Mm-hmm. That is a game changer for the Americans.
Right.
So there's a new normal in the Middle East. So things are changing in real time here, and nobody knows how the pieces are going to fall.
Absolutely, and we've talked about flashpoints a lot, and Turkey is now allowing the U.S. to utilize its base. It looks like they might now maybe put an end to what's happening in Syria.
Definitely. Look, Erdogan's election in Turkey didn't pan out how anyone expected. So when I talk about revolution, will it be a political revolution? Will it be a people mass revolution?
Right.
What will happen in the American election? Maybe there'll be surprises. Imagine if Donald Trump does win. Oh my God.
Yeah, I almost wonder if having, a billionaire running the country could be good for America.
I don't know if Donald Trump's the one, but anyways, he'd be entertaining for a
Absolutely.
Canadian to watch.
I would love to see what he would do with the White House. That would just be amazing to watch.
Trump's house, eh?
Yeah, absolutely.
Look, there's a lot of issues going on. What happens if the Chinese power, where they're using this corruption scandal to get rid of people? What happens if that's not about corruption? What about its consolidating power? There's so many questions out there.
Right.
And in the Middle East, what happens? What happens in Russia? Is Putin here to stay long term? There's so many questions.
There is, absolutely. What do you make of the sanctions being lifted in Iran? It was a great thing for the people there, but apparently they have a lot of very readily accessible oil that's on flotation that can hit the market quite rapidly.
Not just that, they have on-store shortage. They can easily bring on another 1 million barrels into the international market within 12 to 18 months. So that's, again, more pressure on the price of oil. And I think I'm going to challenge a lot of the existing economists that think low oil means the global economy is going to get going again. Not really.
You don't think it's a stimulus?
No, I don't. People think it's a zero-sum game. The reality is that there's such a lack of U.S. dollars flowing into the emerging markets that there's very little growth in the emerging markets. So where is the growth globally? Well, it's not in Croatia or Czech or in Italy.
Right.
It's not in Europe. It's in the emerging markets. And if they don't get going, where's the global growth going to come from?
Well, they seem to be the only, areas that are actually investing in resources for the long term. You're seeing Japan buying out huge positions in Ivanhoe. Yep. They're investing for the future, so they seem to believe that growth is going to come.
But you're looking at, in our world of the juniors, that's a big investment, putting in a couple $100 million. That is insignificant when you're talking about the AIIB, the Asian Investment Bank, and you're looking about their 50-year programs, about the Silk Road. That's just a company's strategic investment. So yes, they're expanding, but you're looking at bigger deals, the world's largest construction projects with Russia building a pipeline to sell 30 years of gas, and that's going to twin. That we're talking about, when that's all said and done, that's going to be $1 trillion full-out package. That's a big deal. So yes, China's growing, and then you got the wild card of India. Will India ever get its act together? I went there, spent 2 weeks there, and I think the problem with India is there's just way too much corruption and bureaucracy. So I wouldn't bet on India saving our global economy growth in the next 10 years.
Yeah, just as we wrap up, Marin, what are you betting on right now? I know you're betting on good people, and that's really your philosophy, is getting behind great management teams. But timing,
you want to look at, for example, I wrote a whole article on my website about Ross Beatty, Altira, where 7 years ago I challenged him publicly saying, hey, don't buy this. I told everyone on a panel, it was videotape recorded, and now I've become one of the major shareholders of it because over $2 billion has been invested. Everyone got bored of the story. Now everything Ross said he would do, he did and more. Right. You got Berkshire Hathaway put up just under $300 million, and people just got bored of the story. And now I'm buying assets at 25, 30 cents on the dollar that are producing. And in the near term, I'm going to be the most hated guy in the resource sector. I'm actually okay with the US dollar.
Really?
It's my largest holding in my fund.
Right, right. So if the interest rate hike happens, then you'll be pleased.
Well, look, I think this. If the hike doesn't happen, the US dollar is still going to do okay. I have enough investments in the resources where you invest in the right management teams, you're going to do okay. If the hike does happen, the US dollar is going to get stronger. The Canadian central bank has said our dollar is going lower because we're not getting the revenue from the resources, we're going to get it from our export market, and that
Right.
only works if we get a lower dollar. So why fight the Fed?
Right. Absolutely. Well, Marin, thank you so much for joining us. You can find more at Katusa Research.
Thank you very much.